We're speaking now with a legend in the mining space. Ian Telfer is a mining mogul and philanthropist who's been in the industry for decades. He was previously chairman of Goldcorp and is now involved with a number of new projects that we'll be discussing with Ian. Honored to have you on the show. Ian Telfer, welcome to Kitco.
Thanks, David. My pleasure.
Ian, before we talk about your career and some of your career highlights and your philosophy towards mining, I want to first get your take on the current market conditions of the resource sector. As you know, gold has been stalling ever since its peak in August 2020. And as you may be aware, the gold mining sector, the stocks have not been doing tremendously since then as well. The GDXJ, for example, the index that tracks the junior gold miners, have fallen about 30 to 40% off its highs last year. How can investors approach this space given how low valuations are relative to where they were last year? Is now a good time to get in, or do you think there's more trouble ahead?
I think it's going to take a little bit of time to sort the market out. And again, the thing that drives the price of shares is the price of gold. And the price of gold has not reacted the way people thought it would, given all the things going on in the world, whether it's inflation or political risk, et cetera. So I think we're still in for a period of similar valuations going forward.
Similar valuations. So what is your sentiment right now for the gold price? I mean, you did state that the gold price does drive gold stocks and share performance. So how do you feel about the price overall right now? Are we in a bear cycle? Are we in a cyclical commodity boom cycle, as some may speculate? What's your view?
Well, I'm very positive on the price of gold going forward. So I don't know whether I'd characterize this as a bear cycle, but I think it's just part of the cycles of the gold business. And right now it's struggling a little bit, but I think as we go forward, I think gold will do quite well.
Okay. And what are some of the forces that might do or might drag up the gold price, in your opinion?
Well, inflation for sure, but that might be offset a little bit by higher interest rates. But I think inflation will win out in the end. And so I think it'll be inflation and all these governments running up debts and printing money will force people to take a harder look at gold, and that will move the price ahead.
Mm-hmm. Okay. All right, let's talk about the current mining sector. Now, not a lot of activity I've heard, not a lot of buzz from the executives and the investors I've spoken to recently. Do you think M&A in the gold sector has been slowing down? And if it has been, do you see it picking up anytime soon?
That's a great question. I would have thought that there would have been more M&A, but at $1,800 gold, a lot of these companies, these mid-sized companies especially, they can make money and pay their executives and keep things moving forward. So there's no real pressure on them to try to get together or consolidate the industry, which I think is absolutely necessary for the industry to go forward. So as long as these people are comfortable in their CEO chairs, I think there'll be limited M&A activity.
Limited M&A activity. Well, let's talk about some of the seniors then. Barrick, for example, do you think they're making a mistake not making any significant deals right now at current prices and current market conditions?
Well, as I said, people like growth. And when they see companies not growing, they lose interest in them. And so, yeah, from some of the comments I've heard from Barrick that they only want to invest in things that have exciting returns at $1,200 gold. I don't think gold's going back to $1,200 in our lifetimes. So when you have that type of a criteria, you're never going to buy anything. And if you're never going to buy anything in our industry, you're going to shrink. So yeah, I think it's a mistake for them not to be out there trying to tie up assets.
Wait, gold's not going back to $1,200 again in our lifetimes. It wasn't that long ago that gold was at $1,200. I mean, it was within a decade ago. So why do you think that's not possible anymore going forward?
Well, first, we're having trouble finding gold. And secondly, just the environment that we're in now, I don't see gold ever going back to $1,200.
Why are we having trouble finding gold? There does seem to be new exploration activity, new juniors popping up every year. Projects are underway. Have we reached peak gold? Is that what you're saying?
Yeah, I think we have. I think we have. I think at anything below $3,000 an ounce, we have found most of the gold we're going to find, maybe all the gold we're going to find.
All right.
And if you look at the exploration successes over the past 20 years, they've been declining steadily for that period of time. And it's not because people haven't spent money or they don't want to find gold. It's because I think all the gold, all the deposits that can make money below $3,000, I think have been found.
Okay, well, you've certainly had a lot of success over your career finding gold, okay? I think that would
but I usually found it on Bay Street. I never found it in the bush. And that's an important distinction. And that's, one of my observations
What do you mean by that?
of the industry. You cannot grow, you can't create a large gold mining company through exploration. You can only do it through acquisition.
Okay, so what do you mean by that? Bay Street versus the bush?
Well, if you look at how we grew Goldcorp, we made a rapid series of acquisitions of existing assets. And that's how we grew the company. We had no success at all with grassroots exploration, none. Okay.
If you were to, well, you're currently involved in some projects, we'll talk about that, but just hypothetically, let's say you're still at Goldcorp, mid-tier, large cap gold company, and your investors are asking you to do some exploration. What would you do differently today versus, let's say, 20 years ago?
Well, I don't think large gold mining companies have had any success at all with grassroots exploration. I don't think they're very good at it, and they just don't seem to be able to find significant deposits. So I would not spend any money on grassroots exploration at Goldcorp or anywhere else.
You'd spend that money on acquiring juniors?
Absolutely.
At what gold price would it be acceptable for an executive like yourself to be looking at acquisitions of juniors?
Oh, certainly $2,000. Again, if you're the CEO of a gold mining company and you don't think gold's going to go to $2,000, then you're in the wrong business. Gold shares are bought by people who think gold is going to go up. And I believe gold's going to go up. And so I'm very comfortable using the current gold price or slightly higher gold prices to make acquisitions.
Okay. Well, even at $1,800, people have been telling me that gold companies are making tremendous margins and their cash flows are very good. Do you think asset prices at current gold levels, current gold price levels, Ian, do you think asset prices may be a little bit overvalued for an acquisition, or is that too strong a term to use?
It's too strong a term. I mean, gold equities are always priced to perfection. That's the nature of the business. That's the nature of the people that own gold shares. They think gold's going higher, so they're willing to sit on share prices that may look expensive to some, but if you're a believer in a higher gold price, it's going to get cheaper in the future. And so I always think that gold assets are priced to perfection, and if you want to grow in this industry, you're going to have to go out and pay those prices.
Mm-hmm. Okay. Ian, what's next for you? Tell us about the current projects you're working on.
Well, my involvement in the industry is as chairman of Aris Gold in Colombia, and we're putting something together down there that we're excited about. And so I'm definitely involved in that. And beyond that, in the gold business, that's my only connection to the industry these days.
What are some of your favorite mining jurisdictions right now? If you had to pick, if you had to go back into the game and start drilling again, where would you go?
Wow. Well, I like Canada. I like the United States. And I've spent a lot of time in Latin America. I still like Latin America, although the politics are getting more complicated for sure in a number of jurisdictions. So, and political risk, I think, has been undervalued by the market and undervalued by gold executives. And so I think people are going to have to be very, very careful going forward about political risk. Political risk.
So you're talking about places like Latin America, Eastern Europe, or even in North America, we have political risk?
Well, more Latin America, where we're seeing tax changes and regime changes and rule changes, et cetera, in a number of countries. That's been very disappointing.
Okay, right. Well, let's talk about the transition from our current petrol economy to an electric vehicle economy. Everyone's doing it now. Even a lot of countries in the world are banning the sale of petrol vehicles past 2030, 2035. And so we're seeing this huge transition. I've been hearing from some economists that the metals industry currently does not have enough production or supply to meet the demands of the EV industry going into the next 15 years. Is that a sentiment that you share?
Absolutely. Absolutely. Yeah, no one's prepared to electrify the world, and the mining industry is part of that challenge.
Okay. What can we do to fix that? How can we, as an industry, base metals industry, increase our production to meet demand? I mean, we're talking about a huge increase in demand here, which requires and necessitates a huge investment in CapEx in the mining front. What needs to happen?
Well, people have to expect they're going to get great returns on their investment. And that's going to take time, number one. And number two, I don't think that the timelines being set out by different governments or environmentalists, I don't think they're realistic. I think it's going to take much longer. And I think the mining industry will catch up. It'll be a bumpy road, but the mining industry will catch up as it goes forward.
Well, do you think the metals prices need to be much higher before investment comes into the space?
Yes, absolutely. People have to see really high returns to invest in some of these metals that are going to be needed for the battery economy. Yeah,
it's a difficult predicament, isn't it? Because it's a chicken and egg problem. An investor is not going to go into the space without seeing some sort of capital development or return on investment capital proven in the balance sheet or an income statement, but that's not going to happen until the miners see higher prices.
That's correct. And so the prices have to move first.
Okay. Ian, let's talk about, I want to get, I'm a young person. I've admired your work. I want to get sort of your, I want to understand your history a little bit more. Tell us about some of the deals that you've made over your career that you've been most proud of.
Oh, well, the creation of what turned into Goldcorp has to be the highlight of my career. We started in 2001 with basically a shell company, Wheaton River Minerals. It had no reserves, no production, no revenue, but it had $10 million in cash, and it had a market cap of $10 million. And then over the next 7 years, made a flurry of acquisitions, and it resulted in the market cap going from 10 million to 50 billion. And it had the largest market cap in the world for a while. So that, I'm very proud of that, how we did it, how quickly we moved, how confident we were in the gold price. And we had a rising gold price at our backs through that whole period of time, which, fortunately for us. But we believed in the price of gold, and that's why we did all the deals. And interestingly, every deal that I did in that 7 or 8 year period was criticized by all the analysts as that I'd overpaid. But of course, 6 months later or 3 months later, the price of gold would pop up, and all of a sudden it looked like a great deal. So we were very fortunate, but our timing was right and our vision proved correct. And so that's what I'm most proud of.
So when you're evaluating a deal and you've got analysts on your back telling you, look, or maybe not telling you, but just writing reports saying these are bad deals or maybe done at wrong valuations. I mean, how do you approach that? What goes on in your mind that tells you, look, these are actually, good deals? A lot of it comes from experience, I presume. A lot of it comes from instinct. But just looking at the valuations, is there something that the analysts are missing that maybe you're seeing?
I don't think so. I mean, again, the analysts live in this world of numbers, and over time, they start to believe the numbers are perfectly accurate. And so they pick a consensus gold price, which is usually lower than the current price, and then they base all their calculations off of that, and then they come to their conclusion. And that's fine, but if you believe in a different gold price, as I have in the past and still do going forward, then you're going to come to a different conclusion. And so, probably the thing I've learned, one of the big lessons I've learned in my career is trust your own instincts. Don't get talked out of things by your lawyer or your accountant or your brother-in-law or your board of directors. If you have a strong view about an asset or a strong view about a metal price, go for it. Go with it. And you'll usually be proved correct.
Okay. And just on the gold price, you say we can't touch $1,200. What about the upside? What's a good bullish outlook for you that makes sense?
Oh, what, 2,400, 2,500?
Okay. And you still be comfortable making deals at 2,500?
Absolutely. As I say, I think we're at peak gold. And for that reason, I think the price of gold is going to do extremely well going forward.
A lot of people are wondering whether or not there's technological innovations in the mining space, like the oil and the gold mining space in particular, like the oil and shale industries have seen in the last 2 decades. What do you think?
Yeah, I don't think there's any visible technical improvement in how we explore for or exploit mining assets. I'm always jealous of the oil and gas industry. The big advantage they have is that the specific gravity of oil is different than the specific gravity of the rocks that it's in. The challenge we have with gold is the specific gravity of the ore is identical to the specific gravity of the waste rock. And so we just haven't found a way from surface or from even underground with electronics or with pulses or whatever to differentiate what's ore and what's waste.
Well, if you had to talk to an engineer about creating a wish list of technological improvements that you'd like to see in the coming decades, what would that list include?
Oh, the list would be something that can identify very low-grade gold deposits mixed in with waste rock and be able to tell them apart. That would be what I would wish for. Okay.
I want to end on the outlook for the mining industry as it relates to younger people. Now, my generation, the millennials, we've been absorbed by media hype around stocks, perhaps, meme stocks, cryptocurrencies, and all that. Very few younger people, my generation or younger, are heavily interested or invested in the gold and resource sector. That's not to say there aren't any, but we're just in the minority. And so, is the industry doing anything to attract younger capital or not?
I don't think so. I think the industry, they're struggling to attract capital, period. They don't have the bandwidth to focus on younger people. And again, younger people, are so interested in growth and so interested in companies that have obviously bright futures in front of them. It's going to be difficult to attract them to gold, especially if we've hit gold. So if gold production continues to flatten out and then starts to decline, I think it'll be very tough to attract young people.
It is tough, and especially when cryptocurrencies are, are burgeoning a sector that's stealing a lot of capital. How can gold compete with, let's say, Bitcoin in attracting capital?
Well, as I say, the price will have to move first. So if you see the price of gold go to $2,400, all of a sudden capital and young people will show up. Okay.
All right. Ian, final words for the younger generation, career advice, outlook on the economy, outlook on the industry that maybe a 20-year-old Ian Telfer would like to know if he were here today.
Well, listen, obviously for me, it's been an incredible industry to be a part of. I had a great deal of fun. I've met some fabulous people, and I've had a little bit of success. And I think those opportunities are still there. And I guess to young people, I would say that when you're looking at where to put your career, going to a sector that's maybe a little bit out of favor might be an advantage to you, less competitive, and maybe some opportunities that others aren't seeing. So it's an industry people should look at for sure, and you can have great success there, have a lot of fun, and meet some wonderful people.
Okay. Ian, I want to thank you so much for coming on Kitco. Honored to have you on the show. Great to have your insights. I hope to speak to you again soon one day.
Thanks, David. Take care.
Thank you for watching Kitco News. I'm David Lin.